Hello, my friends. I hope you're doing well. Today is Sunday, Easter Sunday, the 20th of April, 2025. I'm just wishing you all happy Easter and hope you've had a lovely day. So today I'm going to run you through the Swiss franc, Japanese yen on the daily time frame. Just to again teach you how to trade um, the right way and make some money from this business because again this is a very difficult very hard business to make money from. Yeah, I mean there are people making money from trading for real. Also there are fake gurus out there um, selling you um, products that are not useful at all. Yeah, so again, welcome to my channel. If you're a first time visitor, you've not made a mistake. You're the right place, and here you will learn how to trade the right way and get money from this difficult business. All right. Okay. So let's dive in to why we're here. So on the daily time frame, the first thing that I do each time I look at any chart is to identify the trend. All right. So right here we have an uptrend. Yeah. You have an uptrend right there. Okay. So again, when we are moving in an uptrend or downtrend, it gets to a price, it gets to a point where the price will start consolidating, right? Like, for example, we were moving, doing higher highs and higher lows here. There were no consolidation. Yeah. So what I mean is that there were no sideways until we got to this price right here. Yeah. So when we got to, I believe it was the 15th of March, 2023. Yeah. No, so 15th of November 2023. So, yeah, a year and a half ago, we started going sideways. Yeah. So consolidation is sideways. Zoom the chart for you. So we started going sideways right from right there. Okay. So, um, so when we went sideways, we were bouncing off this zone right there. Yeah. So this was where we're bouncing up. So the reason why I've drawn this zone is this was the first rejection of the level. Yeah. And then we had another rejection at the top. So this was the bottom and this was at the top. Okay. All right. So when we started consolidating here, yeah, we didn't have any close at the top of this zone right there. Okay. Not until we had this breakout right there. Yeah. So January 2024, we had that breakout. So since November 2023, um, we didn't break out of this level up on, not until January 2024. So when we broke out, we had buyers coming into the market. Yeah. So if you are a new trader watching this video, my advice is not to take any breakouts. Yeah. Do not take any, don't trade breakouts. Yeah. Because trading breakout is basically throwing your money, so just giving your money away to the market. All right. So when we broke out, we normally broke out with big engulfing candles. All right. So when we broke out, we had buyers coming in, and if you're a buyer here, your stops are going to be below this level. Yeah, and below that low as well. Okay. So you've gone long. We've retraced. More traders are going long. Can you see that big engulfing candle? Also, this is to get you to take the trade. All right. So if you've gone long at this retracement, your stops are also going to be below this level or that level. Yeah, they will need to come back to take out the breakout traders. Yeah, so no matter where you put your stop, if you put your stop below this low here, below that low there, they are still going to come get you. Yeah, so that this is the template. This is the market structures. Okay, so now they've come back. They've taken out all the longs, all the long traders that have gone long there, and the ones that have joined at this retracement. They've come back to take them out. Yeah. So if you've seen my previous videos, I say that when we break out, for example, we broke out here, we need to identify a demand zone on this leg out. Yeah. This leg out, you need to identify a demand zone. Okay. So this is my demand zone right there. This is my demand zone right there. However, as you can see, they pull back before the breakout tapped in that demand zone. And then we had this massive move to the upside. So this demand zone is no longer fresh. When I mean fresh, I mean this demand zone has not been tested. Yeah? This pullback here has tested the demand zone, which caused this move to the upside. So this demand zone is not irrelevant. Okay, so we actually don't take any trade during this process. We wait for this to come back and give us another demand zone. All right, so now we broke out. When we had this breakout, again, we broke out with big engulfing candles. Yeah, so this has again resulted in people taking short trade. Yeah, remember this breakout here is to remove the people that have gone long on this leg. So the breakout traders here and the retracement traders here, this breakout here is to remove those traders. Yeah, and this move here, this push down here, has achieved that. As you can see, this wick here is lower than that wick. Yeah, so we assume that yes, this is a stop of this long traders have put the stop losses below this low right there. Okay, so we then retraced, we broke out again with big engulfing candles. More sellers have joined the market. Yeah, remember we have three types of traders. We have these breakout traders right there, we have these retracement traders right there, and we have these level traders. So the people that are trading these zones are called the level traders. Example, support and resistance traders are called the level traders. Okay, so these are the three types of traders. So we wait for all these three types of traders to get into the market before we then take our trade. All right, so we then have this retracement. Again, we broke out the zone, this zone right there, um, with this engulfing candle, and more short sellers came into the market. Okay, so when they came into the market, where would the stop losses be? The stops are all going to be below this high here, or even below this level right there. Yeah, above this level right there. Okay, so also these stops will need to be hunted for. All right, these stops need to be hunted for. So this is the reason why it is so difficult to make money trading forex. Yeah, it's so difficult to make money. You just need to understand the market concept, the bank concept, the way they trade. Yeah, what I'm showing you today is the way they trade. All right, so now we've had this push to the upside to get rid of the sellers. Yeah, that stops are all taken out. Yeah, so all the people that have gone this short, Yeah, if you're holding onto your short, this move to the upside, you can see the aggressive move to the upside. The short or if your stop loss is here or above here, above this zone here, your stops are all taken out. Okay, so once we had this break to the upside again, this is when we start looking for where to go long, because we are in an uptrend, so we want to go long with the trend. Yeah, we're not on uptrend, so um we need to be long and not short. Okay, so right now what we need to do now is to identify our demand zone. Yeah, after this break out of the level again. Yeah, so after this breakout again, we need to wait for market to come back for us to take um, a long at our demand zone. Okay, so where is your demand zone to go long? Um, so for these breakout traders, again, breakout, can you see that engulfing candle there? Yeah, when we break out with engulfing candles, like I always say. If you draw your level and your breakouts are not big enough in candle, then that level is wrong. It's not drawn properly. Yeah. Again, can you see that breakout? Can you see the big candle? Yeah. After the rejection of the level with big engulfing candles. All right. So now, when we're coming down, we need to identify the demand zone responsible for this breakout. Right. So this demand zone right here is not a quality demand zone. Why? Because it is very close to the bottom of our zone. Yeah. So for the breakout trade that people have gone long there, the shorts are going to be below this low right there. And they may also use that low. So what we'll do is, if there are no demand zone below this demand zone here, then we'll take this demand zone. Yeah. But if we have a demand zone like this one below this low, we assume that there will also be some stop losses below this demand zone, below this wick here. Yeah. And the reason again I said is because this demand zone is just very close to the bottom of our zone. Yeah. Where there are possible stop losses below this level. So what I tend to do is I would take the demand zone below that zone, which is this one right here. Yeah. So this is a very good demand zone for me. Why? Because we had this drop, we based, and we had this big rally up. Yeah. We had this drop, we had this base, we had this big rally up. Yeah. But again, I believe that there will be demands, there will be stop losses below this low. Yeah. So I will choose that one. Okay. So let's move briefly to the right. So the market came down. Yeah. Again, we broke the level with big engulfing candle, red candle. Yeah. And then the next candle closed. Yeah. Giving you, well, not giving you, but telling the sellers to come into the market, because they've got that signal here of a bullish, of a bearish engulfing candle. So more sellers have come in. Yeah. And as you can see, that low was tapped by this candle. Right. So let's go. So we pushed up, we came back down again. So we had this retracement up again to get more sellers to go to buy, yeah, to go long, yeah. We broke out again with big engulfing candle, red candle, and then finally we came into our demand zone, yeah, that demand zone right there. We came into that demand zone, yeah. So it took us few days, um, well, not few days, it took us some days before we finally pushed up, yeah. So you basically take your long at the demand zone right there. So you take a buy at that demand zone. Uh-oh, sorry. So you take a buy at that demand zone, your stop goes just very low, at the low of the demand zone, and then your TP just at the high of the zone because there are stop losses still there. So for the ones that have taken this short trade there, the stops are going to be below this high there, yeah, and also at the high of the level. Okay, so and then as you can see, we pushed up and you hit your target. Okay, so we expect this to continue moving to the upside next week. All right, so this is how we trade the forex market like a professional. All right, so it's simple. Unfortunately, if you're new to the to this concept, if you've not seen my previous videos, this one is a bit complex because of the structures, yeah, the way that they have um manipulated manipulated the level. So this one is a bit complex. All right. So like I said previously, the template is the same, the structures are different. Yeah, template is the same, structures are different. Yeah. So the more you learn the concept, the more the more you see it, and the easier it becomes. Yeah. So just keep practicing, keep watching the videos. Um, this is something different from what you've seen in other YouTube channels. Yeah. Here I'm here to teach you the right way, and I'm here to show you how to get money from um this business. All right. Okay. All right. Let's stop it here, and I'll see you again on the next one. Thank you so much for watching, and I wish you a better trading. Take care. Bye bye.